Well, good morning and welcome back to the FEG Tax Planning Package. Whether you're doing this on your own, and if you are, that's your business, or whether you're working with a fiduciary at the Financial Enhancement Group, that's our business. We're engaging in a strategy called tax planning. Remember, that is something that has to happen before the end of the year. It's not something you can start January 1st. I've never been a big fan of annual goals that start on January 1. We know within 6 weeks, it's like 90% statistically of the goals are blown, and people tend to wait around until next year. You're watching this video because you are proactive. You care about your financial journey. You want to know what's going on, and we're trying to give you the insight and guidance that you need to be able to get yourself in the right direction. So today we're going to talk about income variability. Now, just as a brief reminder, and hopefully you can recite this to your spouse, your kids now, your friends. Remember, as a fiduciary, you're responsible for 4 categories. Risk and volatility, that's the craziness that goes on in the market. Fees and expenses, that's what's taking away your hard-earned work. The real return is dealing with inflation and how that impacts the portfolio. Doesn't matter how much you save, when you go to pull it out, you want to buy things. If buying things are more expensive today than they were yesterday, that is inflation. We have to have a real return, something greater than zero plus whatever that inflation rate is. And last but not least is the tax planning. And remember, that is something that has to occur annually. Your tax return is a one-hit wonder. At the end of the year, it's signed, sealed. You'll deliver it next April, but there are no changes that you can make to it. Unlike a financial statement where the markets go up and down, could be over a 3-month period, could be over a 1-year period, could be over a 3-year period. The market can and does come back historically over an extended period of time. The tax return is different. They send you that, the CPA tells you how much to pay, you write the check, and the IRS is not going to send you a return unless you happen to have overpaid them. We talked about the concept of the series of steps, where on each block, based on your tax filing status, you pay an amount of money. Once you make a little bit more money, it goes to the next step on that next block of money, and then a little more money, and the next step, all the way from 10, 12, 22, all the way up to 37% is the maximum now. Now, one side note that I will give you is, remember, December 31st of 2025, the tax code will revert effective January 1 of 2026, all the way back to where it was in 2017. That means the 10% bracket stays 10, but the 12 suddenly becomes the 15% bracket. The 22 goes to 24, 25, the 37 goes to 39.6. So ladies and gentlemen, it is fair to say right now taxes are indeed on sale. So the tax planning is always critical, in my opinion, but it's really, really important in terms of where we are. And as a fiduciary, you can't just know what's going on today. You've got to understand or try to forecast what is going to happen in the future. We talked last week about reading your return, modified adjustment of gross income, your adjusted gross income, whether you take the standard or itemized deduction, and then again what your taxable income is, the money that tells you what stair step your last dollar is going to be taxed at. You can find that on line 15 of your return. Now, hopefully you still have that return out. That was the assignment from last week, was to learn how to read your return. But the next thing we're really going to talk about is income variability. Now, in the old days, and maybe some people still do, we talked about above line and below line. Above line is anything that adds income. Below line is anything that reduces that income. All right? Any deductions, tax credits that the IRS is offering based on different things. And as I always try to remind the families we serve, all tax policy really is social policy. The IRS's job is to collect revenue, to take care of bridges and armies and, to the social safety net. But it's influenced in the shorter term by the political the undercurrents that are going on of what people believe that are valuable. And I will give you the best example is your cars. If you have a mortgage or a payment on your car, that interest is not deductible, yet your mortgage is. That was a social policy where we decided it would be a good idea for people to own their homes in the United States. So we influenced it by giving it a tax benefit. That would be the number one argument I would use when people tell me that, hey, Joe, you're just trying to help people skirt their taxes. No, I'm not. No, I'm not. I'm trying to help people understand there is a code, there is a rule book. Do not go outside of the rule book, but the rules are there. Use them accordingly. Right? If you want to pay extra, pay it to a charity or to some place that's going there. Let's follow the rules that are in the book. But the challenge is most people generally do not understand the rules. And again, people think the tax code is for the rich or for the poor. I've got people that make more than $1 million a year that have no clue what I just showed you on the board. It fascinates me, but it is just true. They pay $300,000 to $500,000 a year in taxes and did not understand what you have taken the time to already learn. So congratulations for that. So what is income variability? And these are the things that you really need to think about. What we're looking for are things that are going to change your adjusted gross income, first and foremost, above the line. What has happened in your life this year that has changed that income? Have you sold any properties? Have you made any distributions outside of a retirement plan that was tax deferred? Have you got a raise? Have you got a bonus? Did you get a demotion and lose income? Did you lose your job? Did you retire? You can think of a series of questions. We tend to ask about 10 or 12. If you listen to your retirement playbook, when I talk about income variability, it really is going through that perspective of what do you have, what did you have on your return last year that's different this year? Is it plus, minus, or is it just neutral? Is it just where it was last year? Most people, there's not a lot of variance except under some key triggering events. They got married, they got divorced, somebody passed away, they retired, you suddenly had to start taking required minimum distributions because of your age. But what we want to know is what drove your income higher or lower, because that is going to affect your marginal rate. When you hear me talk about bracket bumping and the double stack, the keys to those are really understanding both where your marginal rate is and how to read your return, how to optimize the situation so that your CPA or accountant or yourself, whomever next April, can tell the best possible story on your behalf to the IRS. Remember, your tax return is a report. IRS, this is what we did, this is what happened. Here's what we owe you. Tax planning is preparing to tell that story. There's things that you can do right now, today, to influence your financial journey, right? And you really, really need to pay attention to that. So that's your income variability, but there's other things that can come into play as well that you always need to be aware of: the deaths, the divorces, the retiring. So some of these things are triggering events, and you can't control them. They come out of the blue. Some of these things are very predictable. You know when you're going to turn 72. So if you're not already doing required minimum distributions, you need to know that's coming. When we talk about qualified charitable distributions and the gifting strategy, we'll come back to required minimum distributions and the itemized deduction, and all of this flows together. So I remind you every week, if you've missed some of these, this is number 4 in a series. If you've missed some of these, just call us at 833-TAX-PAC or go to fegtaxpac.com and get signed up, and we'll automatically get you caught up. We'll start sending you the videos so that you have them. And you can listen to these all at one time if you want to. I think it's better to take them in bite-sized steps. It's better to really learn one and to understand it before you go to number 2, because there are a series of things that are working together. Now, maybe you're like me. And when I say that, the guy who's videoing me just will giggle, because he's heard me say this for 25 probably plus years at this point in time. I was up in an attic and trying to run cable to my office that it was in the house at the time. This is back in 1990, probably 1993 or 1994. And, I'm hot, I'm a big guy, I'm sweaty, I'm cutting my elbows. And, it struck me, this is not what I do. It's not what I do. And I wasn't doing it efficiently. I wasn't doing it effectively. And I said, Andy, dadgummit, right? And he just kind of laughed, and I'm surprised I didn't fall through the ceiling because I didn't know where to put my knees. I mean, bad things could have happened. Things that didn't, fortunately. I didn't die, I didn't break my neck, but I could have, right? Tax planning to me is a lot like that. As you look at this stuff, there's some of these things that you can figure out, but there's also some nuances. If you miss this little thing over here, maybe you didn't get the impact that you should have gotten. And I know there's a sense of pride that comes from doing things on your own. I get it. But this is what we do for a living at the Financial Enhancement Group. It is our blood, sweat, tears. It's our life. This is what we've chosen to do. And you may call that odd. I don't do woodworking. I do tax planning, right? We manage money. And if you want to do it on your own, God bless. But I would strongly encourage you to get some financial advice from a professional fiduciary that understands tax planning to make sure that you haven't missed anything. Because there are things that are there. And all we can cover here are the generalities. If you're looking for a fiduciary, you can go to our website at yourlifeafterwork.com. Reach out to us there. Happy to have you join me on the radio as well. We're going to end it for this week. Next week, we will come back and we'll begin to talk about a few of the strategies and how to take what you've learned so far and figure out how to make your financial journey the best it can be.